Hey everyone, welcome to your Algo Lab. In today's session, we'll give you a quick recap of the most anticipated earnings releases. We'll also take a closer look at individual companies and their peers within the same sector. Without further ado, let's dive in. Intuitive Surgical is a leading company in the robotic-assisted surgery market, best known for its Da Vinci surgical system, which allows surgeons to perform minimally invasive procedures with precision. Intuitive Surgical's stock price is highly regarded due to the company's strong market position, innovative technology, and growing demand for robotic surgeries. Over the years, the stock has shown consistent growth driven by expanding procedure volumes and increasing adoption of its systems in hospitals globally. In Q3 2024, Intuitive Surgical reported earnings per share of $1.84, beating the consensus estimate of $1.64. The company's strong earnings highlight continued momentum in the adoption of its latest robotic surgery technology and margin expansion, with further upside potential as utilization increases. Procedure growth for the quarter reached 18%, surpassing the 17.1% estimate driven by an expanding installed base and higher system utilization, which more than offset declines in bariatric procedures. Intuitive placed 379 Da Vinci systems in Q3, including 110 of the new Da Vinci 5 models exceeding expectations. This makes the company's procedural volume growth guidance of 16 to 17% appear conservative, as only the lower end of the range was raised. Additionally, the operating margin of 37% topped analyst estimates of 34.8%, with management attributing the improvement to operating leverage. They also updated their 2024 operating expense growth outlook to 10 to 12% year over year, down from the previous range of 10 to 13%. Next, let's assess how Intuitive Surgical has performed compared to its peers in the healthcare equipment sector. This sector seems to have consistent outperformance versus the broad market, with its performance closely tied to healthcare innovation, regulations, and competition. We have also compiled key financial metrics for Intuitive Surgical and its peers. The analysis includes two sections, quality and valuation. In the quality section, we consider metrics such as revenue growth, net profit margin, free cash flow margin, debt-to-equity ratio, and current ratio, with higher composite quality scores being preferable. In the valuation section, lower values indicate a more attractive valuation. Netflix is a major player in the streaming entertainment industry, known for its vast content library and original programming. Netflix's stock price is considered a high-growth stock, driven by its global subscriber base and continuous investment in content. While Netflix has seen significant growth over the years, its stock can be volatile due to factors like competition from other streaming platforms, changes in subscriber numbers, and market saturation. Recent efforts to boost revenue include ad-supported tiers and password-sharing restrictions, which could impact future performance. In Q3 2024, Netflix reported earnings per share of $5.40, exceeding the consensus estimate of $5.12. User growth was strong in the third quarter, and momentum is expected to continue into the fourth quarter due to seasonality and highly anticipated releases like Squid Game 2, Paul vs. Tyson, and 2 NFL games. While subscriber growth is projected to slow in 2025, it will remain solid, supporting revenue growth guidance of 11 to 13% following this year's 15%. We also anticipate potential upside to revenue from possible price hikes in the US and overseas markets. Next, let's assess how Netflix has performed compared to its peers in the healthcare equipment sector. This sector seems to have consistent outperformance versus the broad market, with its performance closely tied to healthcare innovation, regulations, and competition. We have also compiled key financial metrics for Netflix and its peers. The analysis includes two sections, quality and valuation. In the quality section, we consider metrics such as revenue growth, net profit margin, free cash flow margin, debt-to-equity ratio, and current ratio, with higher composite quality scores being preferable. In the valuation section, lower values indicate a more attractive valuation. American Express is a major financial services company known for its credit card offerings and global payment network. While American Express has demonstrated solid growth over the years, it can be sensitive to economic downturns, consumer spending trends, and competition from other financial services companies. In Q3 2024, American Express reported earnings per share of $3.49, exceeding the consensus estimate of $3.38. While the company raised its 2024 EPS growth outlook, slowing consumer spending poses a risk to its long-term revenue expansion goals, particularly if the economy faces turbulence. Revenue guidance was tightened as billed business growth slowed by another percentage point year over year. Marketing remains a key driver of leverage, but increased spending can only support growth for so long if demand softens. Although international growth is outpacing the US, it can't fully compensate due to lower profitability from swipe fees overseas. Management also acknowledged that investors may not be keen on higher loan growth as a solution, especially given the current economic cycle. American Express continues to outperform peers in credit quality, boosting EPS, but much of the spending growth is coming from its younger, less affluent customer base. Next, let's evaluate how American Express has performed relative to its peers in the semiconductor sector. This sector is highly cyclical, typically outperforming during market upswings and underperforming during downturns. We have also compiled key financial metrics for American Express and its peers. The analysis includes two sections, quality and valuation. For companies in the financial sector, we apply specific metrics using net income growth instead of profit growth, and excluding free cash flow margin and current ratio, which are less relevant for financial institutions. The quality section includes metrics such as net income growth, net profit margin, and debt-to-equity ratio, where higher scores indicate stronger performance. In the valuation section, lower values represent more attractive investment opportunities. On this channel, we share tested strategies for investing and trading, covering everything from technical analysis and fundamentals to economic trends and sentiment-based algorithms. If you don't want to miss out on any of our content, be sure to like, subscribe, and hit the bell icon to stay in the loop. Thanks for watching, and I'll see you in the next video.